The U.S. economy is sending mixed signals. Is a recession looming? The answer remains unclear. Experts are closely watching key economic indicators. Corporate profits and employment numbers are crucial. Strong corporate earnings suggest a healthy economy. Robust hiring indicates businesses are confident and expanding. However, any significant downturn in these areas could signal trouble ahead. The stock market has been volatile. The S&P 500, a key index, has experienced a significant drop from its recent peak. This volatility reflects investor uncertainty about the future. Some economists fear a potential recession. Others worry about stagflation. Stagflation is a period of stagnant economic growth combined with high inflation. It's a challenging economic scenario. The debate continues. Is the U.S. headed for a recession, or can it maintain its economic footing? Only time will tell. The coming months will be critical in determining the country's economic trajectory. Policymakers and businesses alike are watching closely. The Trump administration implemented significant tariffs on goods from China and other countries. These tariffs aim to protect American jobs and industries. However, they also introduced uncertainty into the global trading system. The tariffs have had a mixed impact on the U.S. economy. Some argue that the tariffs have protected American jobs. They point to industries that have benefited from reduced competition. However, others argue that the tariffs have hurt American consumers. They point to higher prices on imported goods. The tariffs have also strained relationships with key trading partners. This has created uncertainty for businesses that rely on global supply chains. The long-term impact of the Trump-era tariffs remains to be seen. Some economists believe they will ultimately harm the U.S. economy. They argue that tariffs lead to higher prices and reduced economic efficiency. Others believe the tariffs were necessary to protect American interests. They argue that the short-term pain is worth the long-term gains. Regardless of one's stance on the tariffs, their impact on the U.S. economy is undeniable. They have contributed to uncertainty, volatility, and a more complex global trading environment. As the U.S. navigates its current economic challenges, the legacy of these tariffs continues to shape the debate. While the U.S. grapples with economic uncertainty, India's economy is experiencing robust growth. India has emerged as a global economic powerhouse. Its large and youthful population, coupled with pro-growth policies, has fueled its rise. The International Monetary Fund, IMF, projects India to remain the fastest-growing major economy. India's recent economic performance has been impressive. After a slight dip, its GDP growth rebounded strongly. Domestic consumption and government spending have been key drivers of this growth. The Indian rupee has also strengthened against the US dollar. This reflects confidence in the Indian economy. Foreign investors are increasingly looking to India for opportunities. Despite its strong performance, India faces challenges. Unemployment remains high, particularly among young people. Income inequality is another pressing issue. The government is implementing policies to address these challenges. These include infrastructure investments, job training programs, and social welfare schemes. India's economic success is not without its critics. Some argue that the benefits of growth have not been evenly distributed. They point to persistent poverty and inequality. Others worry about the environmental impact of rapid industrialization. However, even critics acknowledge India's remarkable economic transformation. The U.S. and Indian economies are deeply interconnected. What happens in one economy inevitably affects the other. A U.S. slowdown could have spillover effects on India. For example, it could lead to reduced investment flows into India. It could also impact the value of the Indian rupee. Despite these potential risks, India is relatively well positioned to weather a U.S. economic downturn. Its strong domestic market provides a buffer against external shocks. The Indian government also has policy tools at its disposal to support the economy. These include fiscal stimulus measures and monetary policy adjustments. The Indian government is closely monitoring global economic developments. It is prepared to take appropriate measures to mitigate any negative impacts on the Indian economy. India's central bank is also playing an active role in managing the currency and ensuring financial stability. The global economy is facing a period of uncertainty. However, India's economic resilience and the interconnectedness of the U.S. and Indian economies provide some reassurance. By working together, both countries can navigate these challenges and create a more stable and prosperous future.